lives. The Biotech Report with Michael Vaughn on Daily Markets, Monday nights at 6 Eastern, 3 Pacific.
The Ontario Ministry of Education recently announced an extra $33 million in spending for student transportation in the 2005-2006 school year. And that has one company from the U.S. but operating in Canada here, revving up for business north of the border. Denis Gallagher, Chairman and CEO of Student Transportation of America, joins me in studio. So you've just announced your first acquisition in Canada this morning. So what are the terms of this? What can you tell me about the deal?
Good morning, Bridget. The deal that we've announced, we closed on Friday, is formation of Student Transportation of Canada, which we announced last week, but our first closing was Friday night. It's an acquisition in Waterloo, Ontario, about 76 vehicles, about 4.3 million Canadian revenue. We're very excited about the opportunity to expand our growth program here in Canada as well. So it's a chance to be able to get another platform started in Canada for us.
Why Waterloo?
Well, we've been talking with a lot of different operators throughout Canada and certainly with some school officials. This was a perfect little company. The Willis family's been in this business for about 40 years. They've got great people. They've got great contracts. It's a real nice platform for us which to launch our initiative for growth.
And will this be immediately accretive then?
The deal is immediate accretive. It will add cash available for distributions for us and continues to lower our payout ratio.
So the ministry in Ontario just announcing a 5% increase in funding. How much of that piece of the pie do you expect to get?
Well, we certainly would only get our piece, our little piece of that pie, but the fact that the Ministry of Education has decided to put more money into education transportation is very important, and that was one of the fundamental issues that really pushed us forward in coming into Canada this year.
All right, let's talk a little bit about your numbers. In Q3, your revenue was up 2.5%, and that was based on some acquisitions and some contracts. So what is your strategy then when it comes to acquisitions in Canada? You started off in Waterloo. Are you going to stay in Ontario? Are you going to go beyond to other provinces?
Well, we're looking in other provinces. Initially, though, we're going to be concentrating here on building regional density that we do like we do in the U.S. and other regions that we have set up. That allows us to really leverage the infrastructure that we've already got in place. So we've got a management team in place in regions throughout the U.S. and now in Ontario, and it gives us the availability to do some tuck-in acquisitions, kind of stick our flag in the ground and kind of grow our ABC strategy, which is our acquisitions, bids, and privatization conversion type work.
Okay, now in Q3 you posted a loss of $439,000. So what happened there? Well,
the losses are really non-cash kind of losses. They're part of the income trust IPS kind of structure for us. So from a cash flow basis, the company has continued to grow its cash flow, probably I think in the range of about 25% compounded annual growth rate of revenue and of cash flow. So those are non-cash items of our interest deductions and our interest expense we have that's actually in the IPS unit.
Okay, you mentioned that this deal in Waterloo will be immediately accretive. So what is your distribution currently then?
Well, our current distribution is $1.75 that we came out. We IPO'd December 21st, 2004, so we're only 7 months old. We came out at $10 a share. We're going to be looking to do, you know, it's funny when I meet with investors and we talk to, we've done a series of acquisitions this summer and some new bid contract awards that have come to us. All of them have been accretive. All of them will add cash available to distributions. I meet with unit holders and I say, you know, what would you like me to do with the money? There's 3 things we can do: increase payout, lower our debt, or use it for growth, and they basically say, yeah, sure, do all 3. So that's what we're trying to do. We're trying to figure out how to do all 3.
Okay, so currently it's, what did you say your distribution was?
We're $1.75.
Okay, and any plans to change that?
About 9 cents a month. No immediate plans, just that we're 7 months, so we're going to kind of take a look at this after the year end. Our year end is June 30, which just ended, so we'll be releasing our year end numbers as of, I guess, September 30th, and having our annual meeting in December.
Now, some people are warning that this party involving the income trust could come to an end, given what's happening with interest rates and watching them rise. If interest rates continue to rise, what's at risk here for your company?
Well, I think the investors here in Canada actually get our story. I think that's why we've done very well. We are a Canadian company. I know I've heard that we are a U.S. company, but we're a Canadian company that has U.S. operating, despite the name, that has U.S. operating subsidiaries in the U.S. and obviously one in Canada. But the IPS structure is one that is perfect for our vehicle, no pun intended, and it really is a roadway for us to be able to expand. Steady, predictable cash flows, that's what investors here like. It's contracted revenue with school districts and municipalities, which kind of give you a guaranteed stream of revenue and earnings. So, and even though we make our dollars, the majority of our dollars in U.S. dollars, the company has at IPO entered into a 5-year hedge. So we are protected for 5 years out for our distributions of earnings for our customers. And we roll that each quarter.
All right, we're going to have to leave it here. Thank you very much.
Thank you.
And our guest has been Denis Gallagher, Chairman and CEO of Student Transportation of America. Coming up, Linda Nazareth with a preview to the day's economic news. Stay with us on AM Business.
Model.